Hi, it's Rick here. In this video, I'm going to try and explain the three most commonly used chart setups and how you might use them in your day-to-day. These are all the QQQs for a daily chart going back since about May. On the left, I have a simple line chart, which plots the close on each day in the period in question. The middle one is a candlestick chart, which is arguably the most commonly used type of chart. There are hundreds of books written about candlesticks and what they all mean and so on and so forth. I don't pay attention to most of that, but there are some important nuances about candles that I will try to explain. And then on the right, I get my mug out of the way, is a bar chart, which for the past year or so, I have leaned towards. This is definitely my preferred chart for now, and I'll explain why when we get there. So first of all, starting with the line chart, in any of these charts, looking at a 3 or 4 month period to determine the trend is kind of useless. So you really need to expand this out to, I would say, at least a year for a daily chart. Probably 18 months would be better. And when you do that, you can clearly see that in this period we were in uptrend, this period we were in a downtrend. I think even my 11-year-old granddaughter could tell you what the direction of this particular instrument. One of the things that, regardless of what chart you use, I would plot on here would be on a daily chart the 50-day moving average. And it just clearly, it just more clearly defines the trend. So here I plotted the 50-day moving average. And so in my style of trading, I'm not interested in buying anything unless the 50-day moving average is trending up or at worst sideways. So, I mean, this instrument would have my attention in this period here. And has no interest to me when this is happening. And then it would recapture my interest now that it started to turn back up, although it's since crossed over. So we'll get into that in future videos as to how to use the moving averages for putting stocks on your radar, exits, and so on and so forth. But so this is how I look at a line chart. And if you, any of you that have the stocks thingy on your iPhone, but basically that's what you're getting. You're just getting a simple daily close chart, which is moderately useful for determining the trend. Turning to candlestick charts, again, looking at, oops, a daisy. Looking at, trying to spread this out. Again, looking at a longer time frame, again, you get the same picture that we're in a downtrend. I'm not going to draw the 50-day moving average in here. I think you get the picture from that. But let's just look at, let's just expand this out and look at a candle. And I'll try to explain what these mean. Red candles, such as this, there's 4 main points on each candle. So whereas on the line chart, the plotting was just simply the close of the day, which would be at the bottom of a red bar or the top of a green bar. That's where the stock closed for the day. In a candle, it gives you during the day the low point, which is, let's see if I can draw an arrow. The low point, which is here. Oops, go the other way. It gives you the high point, which is here. It's not really shown. There's not much of a wick in this one. The open is, if it's a red bar, it's at the top of the red bar is where the stock opened. And the close is where at the bottom of the body of the bar. So those are the 4 points. So in this particular one here, it opened here, went as high as this, and then closed right at the bottom of the day. So there's a lot more information in a candlestick chart than you would get in a simple line chart. And just going back again, if I go this over, looking at the line chart, you had this period in here where they came down here and then went back up and then went back down. I mean, that's mildly interesting. But what's more interesting to me as a shorter term trader is like, how did this move happen? And the candlestick chart just shows you that much more visual. You had 4 solid days up. You had a gap up here, closed at this high. The next day it gapped down and closed at the very low. And so this is telling a better story than this simple one here. So these are much more useful for trading. Now turning to a line chart, or a bar chart rather, they're very similar to the candlesticks, except they're the 2 reference points that I find most confusing on a candlestick chart is you have to know the difference where it opened and where it closed, whether it's a green candle or a red candle, and it gets a little bit confusing. On a bar chart, it's very simple. This little dot right here on the left-hand side, anything on the left-hand side of the bar is where the stock opened. And on the right-hand side, the little dot there is where the stock closed. And then obviously everything above and below that is the range for the day. So to me, this is just a little neater and cleaner. And I just find for the last year or so, I prefer these kinds of charts. Now, without diving too much into the weeds, but just for a second, just taking Friday's action as an example. So again, this is the daily for the QQQ, and we opened right near the previous day we closed here. Put an arrow there. Oops. That's where we closed. We opened below that Friday morning. We opened here. And we traded all the way down to here and then closed about two-thirds of the way up. So what is interesting, it can get there in a variety of different ways. So the interesting thing about charting is if I change this time frame to be a 10-minute chart and look at Friday, it tells, so here's the open, here's where we closed yesterday, or Thursday, sorry. Here's where we opened on Friday morning. We traded down as far as here, and then we closed, this arrow didn't, we closed right there. So what's interesting about this is that you can see it ran down, but in the last hour of the day, we had some really good strength. So this just adds to the story. But I won't dive too far into the weeds with respect to that. One thing I will do, go back here, we'll change these, and I'll look at a stock that, actually I can take this, change the symbol, NBIX, and how we can interpret these charts a bit more. So again, they all tell the same story, pretty much. Oops, this is still a 10-minute chart. Go back to May. They all look basically the same. I'm going to take this one out of the picture here. So this one is interesting. So here's again, looking at either one of these 2 charts. So I'll just focus on the bar chart. If I can get that out of the way and spread this out. spread this out a bit more. So this stock has had a big move from down here at $75. It ran up, digested this gain for a while, ran up to almost, it did run up to $100, digested it, settled in around the low 90s, and then ripped out again up to 105, 110. And now it's digesting again. And so looking at a line chart, I can see that the lows a couple of times was here and here, but this day it closed, it hit this low and then closed up near the high of the day back into this, I'll call it this range here. Draw that in there. And then the same thing on Friday. Tried to get down here and then closed back up here near the top of the day. So what is this telling me? This is telling me there is some institution that is willing to support, says basically sell me all the stock you can at around $100. I'm a buyer. So that's good to know. That means then I can safely put my stop underneath $100, because if he goes away, it could be that this thing is just going to go right back down here somewhere, or even back down here. On the other hand, there's it can't seem to get past 110. So there's somebody or more that's willing to sell stock up at 110. So from a trading perspective, I bought some here at, I think, I can't remember what my entry price was 102. 103 right here. And with a stop down here. So I can have a relatively low risk stop. The safest buy would be if it goes above 100 and the high is $108, no, 109.29. If it goes above 109, certainly above 110, that's actually a safer buy, because odds are pretty good this is going to continue to go up. But this is how you can interpret these bar charts or a candlestick chart, which you would never be able to do on the simple line charts. So that's a very introductory, and perhaps I've even gone, for some of you have gotten too far into the weeds, but I will prepare more videos in the future on what patterns I'm looking for, how I interpret the action within this to help you make better entry and exit decisions. So that's it for now. Have a safe week. Can't say the market may be due for a bounce this week, but we'll just play the cards as they're dealt. Thanks.